Anshul Saigal this morning, founder Saigal Capital, to talk to us about fundamentals. Anshul, how are you currently viewing the index as a whole? Earnings have started to trickle through thick and fast, especially on the consumption side. We were speaking about that earlier this morning. Uh, do you believe that an earnings uptick could well be on the cards in Q4? Could there be a surprise?
Morning. Always a pleasure to be with you. Yes, this quarter we've seen revenue growth being slightly tepid, but profitability growth being quite strong. And the commentary that one is hearing from companies is actually quite robust. And that suggests that not only for the fourth quarter, but even for the ensuing year, earnings trajectory is going to see tailwinds. We are in a very interesting phase of the market where for nearly 16 to 18 months, our markets have underperformed global emerging markets as also other developed markets. And, in this phase, the reversal in earnings trend has been quite clearly witnessed by the markets. Now, when time correction, price correction, both have happened, and then we are seeing a reversal in earnings, as also the macro clouds that were kind of plaguing the markets, those are behind us. India is set up very nicely for the coming year. I could take the film analogy and say that India is probably going to be the Dhurandhar of emerging markets in the coming year. So we are nicely placed. And when you speak with companies, also their body language, their commentary suggests that there is really nothing to be overly concerned about in this market. So good times ahead in our judgment.
Okay. Kunal, let me come to you with regard to Britannia in particular. The numbers were extremely strong, and Anshul, I'll come to you with regard to the numbers. But how is it looking on charts?
So, over the last 1 week, I've seen this pattern emerging that many of the FMCG stocks are seeing buyers. So, of course, Colgate, HUL, etc., many of these stocks have seen a synchronized breakout. So that tells you that even names like Britannia, which has been doing very well for itself over the last 6 months or so, I think those stocks will also see a good amount of buying for itself. It's completed a minor mean retracement. Minor, I call it, because the stock has not seen a major kind of a price correction. And broadly, I think from 6,200 to 50 levels, it's come back towards 5,800, 850 mark. So it's a very minor kind of a mean reversion of sorts for Britannia. It looks very attractive. In fact, the entire space, FMCG, starts to look very attractive. There are strong cases of a fresh breakout which could be emerging for many of the stocks within this pocket. So I would probably believe Britannia could be a case in point where if in case the stock just about hang around to the 5,800 to 900 zone, could be a very good value buying opportunity.
Anshul, wanted to get your opinion in on the entire consumption piece, and we were just chatting about it earlier today as to how the earnings from there, the revival is quite evident in Q3. Whether sustainable or not is a different debate altogether, but everything from a Titan to a Britannia to some of the Motown plays, etc., doing quite well. You think anything is a good buy at these levels?
Good morning, Aisha. So if you, I'll give you an instance. I met with a apparels company yesterday, and my question to them was something similar to what you asked me. The reason was I was trying to poke on how they are thinking about the recovery in demand patterns. His answer was, this gentleman that I was meeting, that the government has done a lot to loosen purse strings and bring out capital into the markets so that consumers go out and spend. The first port of spend has been on high ticket items, things like automobiles and jewelry, etc. And that spending is going to now percolate to lower value items, the likes of apparel, consumer durables, etc. And even running into this quarter, of course, the last quarter's numbers are out, and those have been for many companies quite robust. But even running into this quarter, since we are in February, the company witnessed continued tailwinds on growth. And they estimated that going forward, this growth is going to continue. We see and hear the same commentary from companies across the board And our judgment is that whatever had to happen on the fiscal side, as also on the monetary side, as regards opening purse strings, leaving cash on the table for consumers to go out and buy, has been done by the government. Now it has to percolate down to actual action and purchases on the ground. We also believe that the consumer is actually building on his confidence. The confidence was a little shaky last year because of a lot of reasons, but going by what is happening with the macros, as also these sort of tailwinds from government, it does look like the consumer sentiment is also coming back. So, in our judgment, this is going to be a good year for consumers across the board, whether it is durables or staples.
Very interesting. Anshul, I wonder what you make of the numbers coming out from Eicher Motors, for example, within the auto pack. The numbers looked extremely strong. They've suggested in the past that they want to focus more on volume, on growth, but what they've done, and they're okay with sacrificing on margins, is what they've said. But they've not done that this quarter. It's a multi-quarter high where margins is concerned as well. What's your take? Can margins continue at this kind of a clip? Will margins continue to surprise on the upside where Eicher is concerned, in your opinion?
While I could speak about Eicher, but let me talk about this trend overall. What is happening in segment after segment, sector after sector, is that companies are gearing up for premiumization. And of course, on a micro basis, when there is greater revenues, operating leverage does come into play, and so margins pick up, which probably is what happened with Eicher. But in general, if you look at companies, they're holding up their gross margins, even if the raw material prices are going up, for the reason that they're premiumizing, and that premium category sales is actually helping them hold on to their gross margins. In cases where raw material prices are not going up, gross margins are expanding. So this is a long-term trend that we will witness in India as our per capita income goes from $2,700 to say $3,500 over the next 3-5 years. We will witness that the premiumization trend will catch pace, and that will show up in numbers, whether companies decide to keep those margins or give it away to ensure that sales uptake continues. That is, of course, something that is left to individual companies. But premiumization as a trend is very much in, and we will witness it sector after sector.
Okay, that's quite an interesting take. Let's take a very quick break on that note.